High tension in US stock exchanges. The search for direction continues in the S&P 500 and Nasdaq. Is this fluctuation a correction or a new opportunity? The S&P 500 and technology-heavy Nasdaq 100 indices, which started the week strongly, faced sharp sell-offs in the second half of the week due to increasing uncertainties regarding the Federal Reserve's monetary policy. Although both indices experienced a similar pullback, significant differences in their underlying dynamics were evident. S&P 500 started the week positively, approaching its historic high of 6,954 points reached at the end of October. However, on Thursday, sharp declines occurred as concerns spread that the Fed might not implement the expected interest rate cut in December. After this drop, the index found significant support at around 6,655 points, recovering some of its losses. The Nasdaq 100, which is heavily weighted in technology stocks, experienced a similar fluctuation. After retreating from its record high of 26,399 points at the end of October, the index fell to around 25,000 points, near its 50-day moving average. The main reason behind this volatility is the changing expectations regarding the Fed's monetary policy. However, the divergence among the indices was notable. The S&P 500 showed relative resilience thanks to strong company fundamentals and resilient consumer spending. Meanwhile, the Nasdaq 100 was more adversely affected, reflecting the technology sector's high sensitivity to rising capital costs. In the current volatile market environment, technical levels provide a roadmap for investors to identify potential risks and opportunities. These support and resistance points offer important clues about the short-term direction of the market. For S&P 500, in downward movements, the first level to watch is 6,724, with a more critical level at 6,550, which corresponds to the 50-day moving average. In upward movements, the historic peak of 6,925 serves as a significant resistance level. For Nasdaq 100, the 25,000 and 24,600 points range is considered a critical support zone where buyers may regain strength. In a potential recovery, the 25,750-26,000 range will be monitored as the first important resistance band. In summary, the US stock markets are still searching for direction due to Fed uncertainty and profit-taking in technology stocks, and closely monitoring the specified technical levels is critically important. We will continue to gauge the market sentiment. Stay tuned for more.